Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 20th, 2025, and we're diving into the fiscal second quarter earnings report of Hovnanian Enterprises, a leading national home builder. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Hovnanian Enterprises has been a significant player in the home building industry, and their latest earnings report provides some interesting insights into their current performance and future outlook.
Revenue and profitability overview. Let's start with the top line. Hovnanian Enterprises reported a total revenue of $686.5 million for the second quarter of fiscal 2025, which is a 3.1% decrease compared to the same quarter last year. John, what does this mean for the company?
While the revenue has seen a slight decline, it's important to note that the net income for the quarter was $19.7 million, translating to an adjusted earnings per share of $2.43. This is slightly below the forecasted EPS of $2.45, but given the challenging market conditions, it's a respectable performance.
Indeed, maintaining profitability in a tough market is commendable. How does this align with their strategic goals?
Hovnanian has been focusing on improving their balance sheet and increasing their land position, which positions them well for future growth. Despite the revenue dip, their strategic initiatives seem to be on track.
Operational efficiencies and future outlook. Operational efficiency is crucial for any business. Hovnanian's SG&A expenses were $80.6 million, slightly up from last year. How does this impact their operations, John?
The increase in SG&A expenses to 11.7% of total revenues indicates a focus on maintaining operational capabilities. However, their interest expense as a percentage of revenue has decreased to 4.2%, showing effective cost management.
That's a positive sign. What about their future outlook?
Hovnanian has increased their community count by 15%, which is a strong indicator of their growth potential. They are well positioned to capitalize on any uptick in housing demand, and their strategic focus on land acquisition supports this outlook.
Market challenges and strategic responses. Gross margins have been a concern with a decrease to 13.8% this quarter. How is Hovnanian addressing this challenge?
The decline in gross margins is partly due to the costs associated with mortgage rate buydowns. However, Hovnanian is strategically managing their land transactions to ensure economic viability, which should help stabilize margins in the long run.
And what about their contract backlog and return on equity?
The contract backlog stands at $988.2 million, a decrease from last year, but their return on equity is impressive at 27.0%. This indicates strong financial health and efficient use of equity, which is encouraging for investors.
CEO's perspective and strategic initiatives. Let's discuss the strategic initiatives highlighted by CEO Ara K. Hovnanian. What are the key takeaways from his statements?
CEO Ara K. Hovnanian emphasized their efforts in debt reduction, having decreased it by $742 million since 2019. They've also repurchased 2% of their common stock, which reflects confidence in their financial stability. Additionally, their land position has increased by 50% since 2023, providing a solid foundation for future growth.
These initiatives certainly paint a positive picture for the company's future. How do you see these impacting their long-term strategy?
These moves are strategic, aiming to strengthen their balance sheet and enhance shareholder value. By focusing on land acquisition and debt reduction, Hovnanian is positioning itself to leverage future market opportunities effectively.
Key takeaways. As we wrap up, Hovnanian Enterprises has shown resilience in a challenging market with a revenue of $686.5 million and an adjusted EPS of $2.43. Their strategic focus on debt reduction and land acquisition is commendable. John, any final thoughts?
Hovnanian's strong return on equity and strategic initiatives position them well for future growth. Investors should keep an eye on their ability to capitalize on market opportunities as conditions improve.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Hovnanian's performance in the comments below.